All right. Welcome, everyone, to another episode of Market Pulse with your host, Tom Vays. This used to be a show I used to do only about traditional markets without much focus on Bitcoin. The S&P 500 had a very interesting close. Those of you that watched my Twitter and sort of show this morning heard me say a lot of things about the S&P 500. And I figured since I tweeted out the fact that I redeployed some of my retirement funds back into the S&P 500. I wanted to discuss that, what my thinking was, and whether that remains a decent idea or not. So let's go ahead and find out. You also see this background behind me. This is Understanding Bitcoin Conference, which will be taking place at the end of May, May 28th to 31st, and registration will open very, very soon. All right. Let's go to screen share. Where are we here? Okay, so let's jump right into Twitter. This was the tweet that I sent out. Now, those of you that watched this morning's show, you saw me looking at this bounce, and when it couldn't be sustained, I was looking to short the S&P 500. Obviously, I don't want to do this as a day trade anymore, but I was hoping that the ultimate bottom would come around 11 a.m. And around this area here, $3,006 on the S&P. That was going to be the low I was trying to time. Unfortunately, the market reversed 30 minutes earlier and I wasn't paying attention, so I couldn't get in on this trade. So I took the next best trade that I saw, which was buying the secondary low, which was also kind of a double bottom, but to me, not exactly. I saw this as an up. I was watching this reversal because I started looking at the market again. And I did make a fair amount on the S&P all the way back up. And I was out a little while ago. I don't really talk about my retirement trading. I always say that I am a bullish the S&P, and I usually am. Now, in this case, I might start talking about how I'm using my retirement account. I was going to save that for next year. I don't know how much I'm going to talk about it this year. Yeah, unfortunately, this isn't a Bitcoin show. You can see it from the title of this video. This has nothing to do with Bitcoin. This is an S&P 500 show. So for me, this is a monster drop in a short amount of time. And nothing goes down forever. Nothing goes down forever. Everyone is incentivized to pump the market back up, which is one of the reasons why the market always tends to rise. Is the coronavirus considered a possible black swan? Maybe, but not really, right? Because black swans are usually unpredictable events, but everyone's been watching the coronavirus. So let's review this. This is a 5-minute chart. This is the daily chart. Excuse me. Sorry, that was the weekly chart. This is the daily chart, and that was the weekly chart at the time. So what I am doing is I played the moving average bounce, okay? And in the tweet, if you read the tweet, those of you that read the tweet, where was I? Here. I think it was in my follow-up tweet. Here we go. Normally, I wait for sequential to line up, but we fell too far too fast. The risk is well defined. A drop under 3,000 and the trade fails. But if we stabilize here at the moving averages, the 9 buy daily should still show up if the market rises tomorrow. I'm happy to add more. So let's review. Let's go to the chart and let's review. We're going to start with the highest level time frame. Well, the monthly is the highest level time frame. So the monthly is currently flipped over to a red one. We've seen these before. Okay. Now this correction may look bad, but on a monthly scale, it's nothing crazy out of the ordinary. On a monthly scale, one second. Okay, so on a monthly scale, this candle is nothing crazy out of the ordinary. We've had these just at the very end of last year, and it went all the way down to the 50-period moving average on the 50-day moving average, on the 50-week moving average. And you know what? Let's go back to the monthly. Remember, the 12-month chart, the yearly chart did hit a yearly 9. So there are reasons for a significant pullback in the market. This 9 on a yearly could actually lead to a significant decline. How big of a decline? I highly doubt that we're going to go below 1,500 in the S&P. And even if we do go to 1,500 in the S&P, it's not going to happen in one day. That's not how markets work. So this is why we're going to zoom in. On a monthly scale, it's a pretty bad month. But let's go to the weekly scale. The weekly scale is hitting the 50-week moving average. It's a significant moving average that tends to hold up the price. Now, this is probably one of the worst weeks in stock market history. I'm pretty sure that it is. Actually. So we just fell over 10% in a week, almost 11%. And we still have one more day to go. There's still Friday, right? There's still one more day to go here. So I was looking, to me, it feels like we fell too far too fast. Even in an environment with the coronavirus, there are short sellers that will be taking profit. Now, short sellers do not lower the price of an asset, but they do stabilize the drop. And when we get to the daily chart, we got to talk about the stop loss and other things. Okay, so from a weekly perspective, where are we now? Well, we still have one more day, but from a weekly perspective, if the price closes below this moving average, and especially if it closes below this green dotted line, then there is a very high probability that the market is going to go down to the blue. Okay, then the market is going to go down to this area. Jesus. So that's what we have to realize. So we need one more day on this. Okay, let's go to the S&P. Sorry, we are on the S&P. Let's go to the daily. It's been a long day. So same thing on the daily, right? Like we fell early, we rebounded, and I am looking at the 200-day moving average. The 200-day moving average has historically done a good job of supporting the price. You can see how we fell here. This isn't the first time I'm entering the stock market by catching a falling knife. I believe I did it here as well, but here I had the 9 to help me. Here I had the 9 to help me out. In that tweet, I said I would normally wait for the 9 on a daily. The reason why I didn't do it this time is because we fell so much. And we could have still gotten a 9 as long as we stayed under 3,100. Okay. Hey, hold on a second, guys. Okay, I'm back. So this is an ugly looking daily candle, but now it takes us even further down. We are in the middle of nowhere, but the 9 is coming, but so is the weekend. So here's the plan, my plan. I mean, you guys have your own plan. This is a zero leverage trade to get back into the market because I did pick up significant gains all throughout. And I was not in the market during this entire drop because I got out on one of these 9s and didn't like redeploy. So I was like, shit, I'm missing out on gains, but I didn't get back in with the conference and all this other shit. So I got to avoid this whole drop. But now I felt that this is a reasonable place to attempt to catch a falling knife. And if it isn't, I will lose, I don't know, 1% or something, 1 to 2%, whatever it is, because this is a zero leverage trade. And that's the importance of risk management in a retirement portfolio, because you can't take a risk on never being able to trade again because you don't get to put money into a retirement account very often. Now, we had crazy crashes before. Granted, they didn't have anything to do with the coronavirus. Like, this was a beautiful top on a 9. That was back in early 2018, and that was a scare. This was a bigger one, and we got out of it nicely. Now, can this lead to a significant fall in the market? Well, it could. This was also in the middle of nowhere, and it rebounded. Now, I am not going to take any chances. Now, am I still in that trade? The answer is yes. However, unless the market rebounds back above 3,000 tomorrow, I will no longer be in this trade, and I will wait for another buying opportunity. But I am not shorting the market. I don't really short with my retirement account. Maybe I will next year when I pay more attention to the market. Someone says this is a falling guillotine. I am not scared of buying into a bloodbath. I never was. Okay. That doesn't scare me. We'll take a look at Bitcoin in a minute. Is Bitcoin dropping too? Yeah, that makes sense. Well, Bitcoin will move with the stock market, right? I anticipated there was a nice breakout here. Certainly a bullish trade that we talked about. I'm going to go back to the S&P 500. We'll deal with Bitcoin later. So right now, what I am looking at is I'm going to give this one more day. I'm going to give this one more day to rebound. So tomorrow, I will, even if it gaps down, even if it has another gap down, Because remember what happened this morning? This morning, we had a huge gap down. We had a huge gap down. We went lower, and at 10:30, we rebounded pretty heavily. Now, we didn't close the gap, but we rebounded pretty heavily. The market does like to close gaps. It doesn't always do it, but it likes to close gaps. And these are some of the biggest gaps in the market I've ever seen right here. Okay. Now, nothing ever goes straight down. Like if we go back to the 2008 financial crisis, which I think was a lot worse than this coronavirus. Where's the go-to button? Wait, oh, there it is. Okay, so if we go back to 2008, okay, so here is the S&P. I should probably look at the NASDAQ. Let me look at the NASDAQ. Hold on. Because the NASDAQ fell harder. So NASDAQ composite on a weekly scale. Yeah, we can look at that. And I think I also have NDX. Well, let's see what we got here. Oh, this is a NASDAQ hyperwave. Okay. Well, actually, you know, wait, I should be looking at the banking sector. This is NDX now. Okay. So I can look at the ETF. No reason for you guys to see my code of sequential. Look, United Airlines had a nice bounce today. I wouldn't necessarily call that a positive volume, but the 9's coming. Rebounded on a 9 here. Look, I just don't believe the market's going to crash. It needs a dead cat bounce. Let me go to the banking sector. So, wow, I'm already forgetting all my tickers. That's how long it's been. XLF, and let's go to 2008. Okay, so here's the banking sector. And look, it crashed. That has to be a data error. The banking sector fell 16%. Well, 17. Let's just do this. The banking sector fell 16% in a short amount of time. But then it rebounded back up and back tested the moving average. See, this is a 200-day moving average. This is the thing that I trust. We fell hard. This right here is a 10% fall, about the same as the stock market right now. We then rallied back up. We then broke the 200-day moving average. Fell 16%. And rebounded into the moving average resistance. So this is why the 200-day moving average is important. Rebounded 12%. Okay. This is the falling knife I'm kind of looking to catch in the S&P right now. Now, whether this goes back up, gets rejected, and then gets crushed, we don't know yet. But what I do know about the S&P 500 right now, and this is the futures, but we can make them daily, is that my moving averages are still rising. And this was a big drop. And even if the coronavirus is going to lead to something horrible, I am still anticipating a dead cat bounce. Now, I may not keep holding this thing. I may change my mind and get out. But right now, I think I'm down maybe 0.5% or something small. This is what it means to be zero leverage trading. Okay, you can sleep fine at night. You don't have many concerns, especially if you were in the S&P 500 making profit on the way up. Okay, that's the important part. I agree. S&P could go down to 2,600 and still be bullish. That is actually correct. Now let's go to the NASDAQ and look at the year 2000. Okay. This is the weekly chart of the NASDAQ with a hyperwave. And NASDAQ fell 30% in the first few weeks. Now, that's clearly a lot. S&P didn't fall like that. But also look at this weekly candle. This weekly candle alone pulled back up. I got to flip the arrow. This weekly candle alone pulled back up 20% and within the second half of the week. I'm actually curious. That is April 30th, 2000. I want to go to the daily chart. I want to go to the week of April 30th. Oh, might have been April 3rd. This looks like it's it. See, on this particular day, on April 4th, on this day alone, I think it was April 3rd, not April 30th. April 3, right? So March 31st, and this is April 3rd. In one day, the NASDAQ rallied 13% in one day. Okay. Now, this was after it fell 20% in a day and a half. Okay. And it wasn't over. I mean, it continued falling all the way down to here, which is a 30% loss. Let's see what sequential did here. Sequential didn't do much. So that's the thinking. Now we'll see what happens tomorrow. For all I know, tomorrow we can the S&P, where am I? NDX. For all I know, tomorrow the S&P could open at 2,600. Like the thing is, we don't know. It may not even open. They may hold trading. They may hold trading for the next 2 months. But it's not going to go to zero. I know that. And even if it opens at 2,600, that's fine, because right now I still have options. And I did want to wait till Friday. And also I was on a call with Dominican Republic about the summit. So I'm perfectly okay with this. So you have to understand what it's like to have zero leverage and what it's like not to be scared of the market. And I'm not scared of the market. Let's go glance at Bitcoin. Well, if the stock market is scheduled to open 10% down, they're going to hold trading. I mean, the market didn't open for 4 days after 9/11, or 3 days, something like that. Okay, Bitcoin. So this is the, let's go to the, no, let's go to the daily Bitcoin. That's the most important one. So Bitcoin is not showing any signs of life, and that is not good, folks. We are now fully below the 200-day moving average. The bounce in Bitcoin is probably over, and Bitcoin could still go to lower lows. Now, I'm still saving a bunch of my retirement account money to go into Bitcoin with GBTC. So obviously, I'm not going to go all in S&P 500. And I have multiple retirement accounts. I mean, those portfolios are completely broken up. And they're used for different purposes. So let's go to a lower level time frame. Now, to me, there is nothing wrong with this head and shoulders, inverse head and shoulders buying opportunity. And it made it not even halfway there. And that's where you got to realize those stop losses. This neckline, if it's broken on the way back down, that's bad. It's in trouble. Now, this is a 15-minute chart. That's what I've been using. And here comes a 9 in about 38 seconds. So I'm very curious what that candle is going to look like. I would have loved to see the 8 candle in reverse. So I would not be rushing in to buying this on a 9. This is a much better 9 to buy on because it already shows you strength, even though volume is pitiful. This is not showing you any strength. And in 10 seconds, you're going to get a perfected 9. But I would not be interested in Bitcoin unless it showed me some significant strength. Okay, there's your 9. Okay, perfected 9. Still not enough to get in on. You know, I don't know why I'm sniffling. I was perfectly fine 2 hours ago. So let's see if this gives you strength. But look, on a 4-hour, that's a 12-hour scale. On a 4-hour scale, Bitcoin is, wow, that's horrible looking. That is very bearish. That's only a red 1. You're making a new low. 4-hour is very bearish. The short trade doesn't activate until you get a lower low, though, on the next candle. 12-hour, I don't really care for that one. The daily looks bearish, and the weekly is about, well, the weekly is still neutral, but it's not looking good. That is a critical rejection of a trend line. I still think Bitcoin has a decent probability to go all the way down to this moving average. Now, the S&P could help it get there. The thing is, the S&P is way more oversold short term than Bitcoin is. Bitcoin is not really that oversold short term. I mean, look, we've had worse weeks, like 5 times this year already. So this is not even the worst week of the year. In the S&P, this is like the worst week in God knows how many years. Okay, so that's what you guys have to keep in mind. Nothing goes straight down. You'll never find an instance that goes straight down. If I go back to the 1987 crash, I'd have to go back pretty far, actually. Yeah, I guess 1987 crash was a catastrophe. So the one thing we have to be careful of is that tomorrow is not one of these, right? Because this candle, these two candles is looking very similar to our current situation. I like this 9 at the top on the daily and this 9 at the bottom, but this 9 would have gotten me in a lot of trouble. Well, it wouldn't have gotten me in that much trouble because I would have gone in with 0 leverage. So even if I lost 20% in one day, it's still not 20% of my retirement account. It's 20% of 1/6 of my retirement account, right? So that's not the end of the world. 20% of 1/6 of your retirement account, right? So that's 7%, 8%, you know, and look at rebound. You have to find a buying opportunity, which would have been very difficult. I don't see any buying opportunities here, not based on my style of trading. In fact, I'm bearish here. I'm bullish here, but I'm bearish down there because it's a break of prior lows. Everyone trades differently. So this is the kind of day we have to watch out for tomorrow. But at the same time, I will always bet against the 1987 Black Swan. It's possible we're in it, but I'll bet against it. All right, what's going on? See, that is a 14% drop. And then on top of that 14%, we got 20%. And if you combine the 2 days, we got 23%. Okay. So yes, this is a concern. Right now, we are on a 6 candle, according to the daily. So that is something to be mindful of. Okay. Now, at the time I entered the trade, this was looking like a reversal candle. Now, it wasn't by end of day, and it literally dropped in just the last hour of trading. You can see it here. So now we got to keep an eye on the futures market. And right at the moment, I think the futures are closed, but they're going to open back up at 6 p.m. At least there's definitely no volume there. And I'm on a delayed quote. So we'll see what happens. But yeah, I'm not very optimistic on Bitcoin right now either. Curious how gold did in this mess. See, gold is just being steady, which means while people are panicking out of the S&P 500, they're not really rushing into anything. Well, oil's down, yeah, because the global economy is slowing down because of the virus. I don't even know what YM is. Is that a stock or is that the E-mini? I mean, I don't want to look at the E-mini Dow futures. That's the same as the S&P. It doesn't matter. I don't really want to look at individual stocks right now. Palladium, I'm kind of curious about. Just easier to type the ticker. Palladium's rising, which kind of makes sense. Palladium is used in air cleanup, and so palladium is probably going to be in demand. Yeah, palladium is bullish on the daily. Green 2 above a green 1 above a 9. Bullish on a daily. All right, guys. This is going to be it for me. It's just a quick update on the S&P 500. I'm sitting in my chair here. Check out Understanding Bitcoin. Tickets go on sale very, very soon. And also, check out the Financial Summit. I didn't do any screen share. If you want to support, check out the affiliate page on tonevays.com. But yes. All right, guys. On this note, quick update on the S&P. I'll update you if I decide to exit that trade. And if I do, that's okay. I'll give up some of my gains from earlier in the S&P this year. And I will try to buy another dip because I've been right holding the S&P for the last 7-8 years. And I don't really see a reason yet to stop. Let's see what happens. All right. On this note, I'll talk to you all soon.